Is the next 2008 financial crisis right around the corner? That's the alarm the governor of the Bank of England is sounding. But today, I'm going to show you the hard data that tells a completely different story. We'll analyze why this fear is actually a buy signal. I'll give you my exact price targets for a world-class company that just went on sale, and we'll look at a tech sector the US government is about to pour billions into. The governor is pointing to the private credit market, saying it feels like 2008 all over again. But when we look at the facts, the alarm bells aren't ringing. Look at credit risk premiums. This is basically the insurance cost for lending money to companies. When risk is high, this cost skyrockets. It happened in 2008, it happened in 2020. Right now, these premiums are calm, even trending down. The market simply isn't pricing in a crisis. Often, when central bankers get this vocal about danger, it's a contrarian indicator. The CNN Fear and Greed Index is sitting in fear. When everyone else is scared, it can be the best time to act. This is a big reason why I believe the S&P 500 is going to continue its climb. These pullbacks are just profit-taking, not the start of a collapse. If you want analysis based on data, not fear, do me a favor and hit that subscribe button. It's the best way to support this channel and stay ahead of the narrative. So, if we're not heading for a crash, where are the real opportunities? First, let's talk about quantum computing. There are strong rumors that the US government is preparing multi-billion-dollar investments into companies like IONQ, Rigetti, and DWAV. This is the government trying to jumpstart the next technological revolution. These stocks have been flying, and for good reason. This is a sector you need to have on your radar. Speaking of tech revolutions, many people are screaming AI bubble. Later, I'll tell you why the real risk isn't investing in AI, but being left out. First, let's talk about a fantastic company that just got a lot cheaper. I'm talking about Loreal. The stock dropped over 6% after its earnings report because it slightly missed revenue expectations. The market panicked, but I see a clear opportunity. L'Oreal is the undisputed king of the beauty industry, a market that is growing structurally. They have an incredible portfolio of brands, from luxury like Lancôme to consumer staples like Garnier. They just acquired the beauty licenses for Gucci and Balenciaga. This is a compounding machine. The recent drop has brought its valuation to one of the most attractive levels in years. My strategy is simple. I'm accumulating shares below 350. I believe a conservative price target over the next few years is around 500, which would be a fantastic return. If it regains its premium valuation, we could even see it above 580. How will they get there? With 7 to 8% annual earnings growth driven by sales, margin improvements, and share buybacks. This isn't a speculative bet. It's an investment in a high-quality, global leader on a temporary discount. Now for some quick hits on other market news. Tesla's earnings were confusing. Elon Musk spent more time talking about AI and robots than their core car business. The market hates uncertainty, and the stock dropped. On the other hand, Volvo surged after reporting incredible cash flow. That's a company to watch. And about that AI bubble, it's not a bubble. We are in the very early stages. The real investment risk over the next decade is not having exposure to artificial intelligence. To wrap it up, ignore the crisis narrative. The data doesn't support it. The fear in the market is likely a bullish sign for the S&P 500. The real story is finding incredible opportunities, like a discounted L'Oreal or the explosive potential in quantum computing. If you got value from this breakdown, please subscribe to Minuto Investor. I'd love to hear your thoughts on L'Oreal. Are you buying this dip? Let me know in the comments.